Steve, it's great to have you back. Organic up 16 definitely gets your attention, and you're guiding above the street on organic. Still, though, there's a bit of a split conversation about whether or not price increases are already baked in for the year. How about you guys?
Yeah, Carl, thanks for having me again. We're very pleased with the performance coming off the fourth quarter. And it was really built on the momentum of our brands, from cereal through to snacking through to our frozen business. And we see that continuing momentum into this year. Some of it is pricing led, to be sure. We've been able to basically cover our input cost inflation, which has been very significant, with a combination of productivity and revenue growth management, part of which is pricing. And so that will continue into 2023. We see a let up perhaps in the second half of 2023, but the first half is going to continue to see pervasive inflation in the United States and indeed throughout the rest of the world.
If there is a bit of a softening up in the back half, is that because the headwinds get lighter, or you think the consumer really starts to get serious about pushing back on price?
I think it's more the former, Carl. I mean, you see spot prices starting to come down. Companies like ours obviously have pretty comprehensive hedging programs in place. So we tend to lag what you see in the spot market. And so we do see a receding of the inflation pressure in the second half. But the consumer, in our space remains incredibly resilient. We're fortunate to be in categories that are very affordable. They're affordable luxuries. And so even as we've been forced to take more price than we would like to take, our consumer has stuck with us. And I think that's based on really the power of our brands like Pringles and Cheez-It and Rice Krispies treats. Consumers love our brands. Provided we continue to invest in those brands, we'll be able to earn the right to be in their pantries.
Yeah, Cheez-Its is a very big deal in my household, I must say, Steve. But just to put a finer point on it, then, does that mean that you won't be increasing prices? You're not planning to increase prices on your products this year?
Hi, Maureen. No, you'll still see increased prices in our portfolio because of the continued rise in the inflationary environment. But again, particularly in the first half of the year. Got
it. In terms of the plant-based part of the business, because I know you announced this morning that you're going to hang on to that and you see that as an area, a future growth opportunity. I guess walk me through what that opportunity looks like, especially as we have seen it's the cost for some of those plant-based products perhaps become less competitive as meat prices start to come down.
Yeah, so we announced this morning that the Morningstar Farms business, which is our plant-based business, we'll retain that inside Kellogg, and then it will become part of Global Snacking Company. So we're only going to spin off the North American cereal business. And the reason for that is when we embarked on the strategic look at our plant-based frozen business, valuations outside of our company, so peer valuations, were stratospheric. I mean, and it was really beholden to us to take a look at unlocking that value because the value was not captured inside the Kellogg company. Those valuations have come crashing back down, in a very dramatic fashion. Morningstar Farms is one of the pioneering brands. It's got a clean label. It's got outstanding food. And there's going to be a shakeout in this category. And so it really is much more valuable to us today and going forward than when we looked at the valuations a year ago. So we're really excited about the prospects. It's one of the best brands when it comes to household penetration, when it comes to name recognition, when it comes to the food that we have. And the consumer is really migrating back into the frozen section where we are really very strong. So we're very excited about Morningstar Farms. We think the clean label, the sustainable, the plant-based are very real macro trends that will continue. And when the shakeout occurs, we'll be one of the strong brands left standing.
It makes sense, the change of view. I guess the question would be whether or not you think the consumer has lost interest, or maybe we were just in some sort of bubble or frenzy regarding plant-based business valuations.
It was definitely a bubble. There was irrational exuberance around the category. But when you look at the consumer, we look at it on a 2-year and a 3-year basis, because when the pandemic hit, this whole frozen space really jumped into the future. And so last year we were cycling, really inordinate growth. And if you look at it from 2 years ago, the category is ahead of where it was. And so it's been this irrational exuberance. There's been a lot of trial. There's been, frankly, competitors who came in the space with inferior offerings. And so people tried that and they, were turned off to the category. So we think that the category is long-term is healthy because, again, it's sustainable, it's plant-based. It's got clean label. And so we're bullish on the category. I think it's just a matter of what it was cycling.
Steve, appreciate it very much. Really a lot going on. A fascinating industry and time. Good to see you again. Steve Cahillane from Kellogg.
Thanks, Carl.
Coming up on Tech Check today, we'll take a closer look at PayPal and Robinhood moving in opposite directions today. Take a look at Affirm, obviously down 20% on the guide and the headcount reduction. Don't go away.